Welcome. And the simulation is going to start right now. I am going to be playing Hacksaw Bob. Now, when I put these glasses on, that means I am playing a part. This is not me. This is me in a role. I'm going to show you and what I'm proposing for the Acme Widget Company. Now, you are my board of directors, and here's the Acme Widget Company, and here is our profits. You can see, here's the current trend in blue. We're not doing awfully bad, members of my board of directors. We're doing okay, but I want profits to be even higher, as I'm sure do you, right? We all do. That's what we're here for. Okay? Everybody agree? All right. Now, so here's what I'm proposing. I have a plan. You're my board of directors, and let me take this off. In real life, board of directors is much smaller than this. We're sitting around a big table, let's assume. Okay, back. So I would like you to approve my plan, and I'm going to explain my plan to you, and then I want a vote of approval. Here's the plan. I want to cut payroll costs by 60%. I want to reduce wages of all employees except top executives by 40%, eliminate health care and retirement benefits for all employees except top executives, and I'm going to accomplish this by firing 25% of the workforce, outsourcing jobs abroad, substituting automated machines, improving overall efficiency, and moving our plant to a non-union state. All right, everybody in favor, I hope? All of those in favor, A, okay? Vote right now. You're in favor? A. If you don't like it, it's B. And let's see 7, 8, 9, 10, and let's end the bidding there. And I hope you see the light. I hope it's A. I need your approval, and you're not giving me approval. All right. So I don't understand. I am trying to get the profits up. Does anybody have a problem with my? What's the problem? What's the problem? Anybody voted against me? Anybody? What's the problem?
It's amoral.
Moral schmoral. Listen, this is what we are doing. What we are doing is moving resources to their highest and best uses. We've got a lot of people we don't need. Have you ever been employed by somebody who doesn't really need you? I mean, do you know how awful it feels to be somebody who's just there for no reason, just having a make-work job? These people are going to have better lives because they're going to be fired. And they're going to get better jobs elsewhere. Better jobs elsewhere, highest and best uses. Anybody else have a problem with me? Yes.
Your workers aren't going to want to work well for you if you don't treat them well.
I'm going to treat them well. Well, let's put it this way.
Retirement and health benefits.
Okay. I hear what you're saying. Look, you say that the workers are not going to be efficient and they're not going to do well if I don't treat them well. But I've hired a consultant company. And what they've done, if they've looked at supply and demand of the kind of hourly workers, these are hourly workers, these hourly workers, they just do the same thing over and over again. There are not going to be any problems. This is the same thing every one of our competitors is doing right now. So there's not going to be a problem. There may be a little morale problem for a while. I'll explain it to them. No problem. Anybody else have, yes, what's the problem?
In the short term, this is going to maximize your profits, but in the long run, this is going to be detrimental to the company.
In the short term, you say it's going to maximize profits. In the long run, it's going to be detrimental to the company. Well, in the long run, as John Maynard Keynes once said, we're all dead. I don't care about the long run. I mean, we want to maximize shareholder returns in the foreseeable future. And by the way, I have stock analysts breathing down my neck from Wall Street. They are looking quarter to quarter. And their major investors are looking quarter to quarter. And that's what we have got to do. We've got to maximize share prices. Anybody else have any problems with this? Yes, what? The reason I'm exempting top executives is because I want to get the best top executives. There is a market for top executives. If we don't pay our top executives enough, then those top executives are going to go elsewhere. I want to get star talent. The other thing I just want to make sure you're all aware of is if we don't maximize shareholder returns, we are going to be taken over. We're going to be taken over by corporate raiders, by shareholders who want higher returns. Private equity funds, you've heard of private equity funds? Activist investors, you've heard of them? Well, we're going to be taken over. And then you're going to be out of a job, and I'm going to be out of a job. And is that better than what we have right now? They're going to do exactly what I have suggested. They're going to make exactly the same suggestions I am making. So what is the problem here? Anybody else have a problem? What's your problem?
So you call yourself a hacksaw, right? But like only 25% might not be high enough. So maybe fire more, automate more, and rely entirely on precariat labor?
You are the kind of person I am proud to have on my board of directors. So you're saying do more of this. Yeah. Fire more if I can. Well, you know, this is a good start. And the reason I got my name Hacksaw Bob, you know, there are CEOs out there. There used to be a guy named Chainsaw Al Dunlap. There was the head of GE was called Neutron Jack. And they got their monikers because they all did something like this to boost share prices and boost profits. Because the biggest cost in this company is labor. And so the way we boost profits is we get labor costs down. And you're absolutely right. If we could do it, maybe next time around, maybe my plan, I'll come back to you. You're a really good guy. Any other problems? I want you to vote on this again, and I want you to vote for my proposition, but I just want to make sure I am responding to every concern you have. Yes?
You're dehumanizing the workforce, and if you have an increase in conscientious consumers, then they're not going to want to buy products.
Oh, yes, you're saying that the workers are consumers, and if they don't have the money or they don't have security, they're not going to buy the products. I know that, but you know, we're only one company. I mean, you've got a lot of other companies out there, right? And if they, I mean, it's not my responsibility to make sure that consumers around the country and every place else have enough money to buy our products, all right? What we have to do is maximize shareholder returns. That is our number one responsibility. That's our only responsibility. It's our legal responsibility. We have a fiduciary duty. Have you ever heard of fiduciary duty? Fiduciary duty. Say it again, fiduciary duty. To maximize shareholder returns. So I don't know, those of you who are worried about this is all, cut payroll costs by 60%, we can do it, we should be doing it, and we can do it in these ways. You got a problem?
I have a question.
A question.
What are the severance packages for the people that will be losing their jobs?
The severance packages, zero.
Is that legal?
What? Of course it's legal. We're not doing anything that's illegal. There's no severance package. There's no law that says we have to give any severance package. Yes? If you want to increase profits, why don't we make a better product? Well, first of all, we are putting money into R&D. Yes, we are. We are. In fact, some of the savings we're going to get are going to go into R&D, and the market's going to react well, because I've already been talking to analysts, and they have been saying to me that you're a little bit low on the research and development side. We would like to see a little bit more R&D, so we're going to do that. We're going to make products better and better and better. Better and better and better. And I don't see, nobody has come up with a good argument. You have a good argument? You don't? A question, yes.
What do you anticipate will happen to all of the people you fire?
What happens to all the people I fire? They get other jobs.
Do you not care about their well-being?
Do I not care about their well-being? Well, I care about their well-being to the extent that we're all human beings, but I, you know, it's not my responsibility as CEO of this company to care about their well-being as human beings out in the world. I would like, as a person, yes, I care about their well-being. I'm a nice person. But in terms of my responsibility and your responsibility as one of my trustees, you know, my board of directors, no.
But isn't your responsibility as a human being?
My responsibility as a human being has nothing to do with it. We're in business. These are laws, what we are supposed to do. And again, I want to stress with you, if we don't do it, a private equity group is going to come in and they will do it. They will do it. They will do it. We're going to be taken over, unfriendly takeover. Or an activist investor is going to come in and buy enough shares of stock that activist investor is going to actually control this company. And if you don't understand that basic logic, then you have no business being on this board. One more, and then I really want your backing on this. Yes?
How much revenue and wages can be saved, or some of the employees that can be saved by firing top executives and maybe moving some of the upper division management up?
You know, the question is, how much can we save by firing top executives? Look, we're not top heavy. I've gone through the top executives, and I have fired some of them. You know that, because we've talked about that before. There are underperforming top executives, but I want to make sure you understand that the market for executive talent is getting tighter and tighter. And so if they are very good, I want to pay them. If they're not good, they're getting out of here. All right? This is why people expect us to do a better and better job on profits in this company. So once again, I'm going to ask you one final time, and I want you to take seriously my arguments, all right? I want you to vote. You, my board of directors, A, yes. You like my plan? B, no. Go. And let's take a look at what you have decided. And I hope you're still not with me, but here's what I like. We're going in the right direction. Okay, I am going to end this simulation before I barf. No, I'm not going to barf. See, what I tried to do, and this was slight caricature, but what I tried to do in the simulation is give you a sense of what is driving a lot of what we see in the economy. If labor costs are 70% of a business's costs, and there's pressure on a business to raise profits, and there are unfriendly takeovers, or as they are now known, activist investors or private equity firms that are ready to take over the business and do all of this, then there is huge pressure on companies, on executives, on board of directors. This is something that is slightly new. What should be the purpose of the corporation? In the 1940s, 50s, 60s, 70s, this was the view that prevailed. Americans regard business management as a stewardship, and they expected to operate the economy as a public trust for the benefit of all the people. This just happens to be J.D. Zerlebach. In 1956, he was a paper executive, but if you actually looked at the economy in the 1940s and 50s, you saw that the dominant model was what we might today call stakeholder capitalism. It was not designed only to maximize shareholder returns. It was also designed, at least according to a lot of how corporations behaved, and not just what they said, the CEO said, but also how they behaved. It was also to improve the well-being of workers and to improve the well-being of communities. And then you had, starting in the 1980s, we have bloated bureaucracies in corporate America. I have to look out for the shareholders' interests, and I'm the largest shareholder, and that's Carl Icahn, a corporate raider of the 1980s. There were a lot of other corporate raiders of the 1980s. They used something then called junk bonds, which actually were very high risk debt that they took on in order to buy what they said were underperforming companies. Underperforming companies meaning that the companies did not have a high return. Companies could have done better if they actually did worse to their workers and communities. Companies could have done better for their shareholders if they cut the fat, cut to the bone. All the butcher metaphors that came out in the 1980s. So there is a fundamental question. This is still the dominant view of the purpose of the corporation. And many people will argue that this makes the economy more efficient. Otherwise, you have bloated corporate bureaucracies. And you've got a lot of people who are sitting around doing things, including average workers who would be much better off if they just had different jobs. And you've got communities that have grown so used to having particular companies in their communities, they don't even appreciate the jobs they have. But this view generated a very different economy. So the question is, who has the superior view? And this is the question I want to leave you with. Is it Zellerbach or is it ICANN? Go. 5, 6, 7, 8, 9, 10, and let's end the bidding there. Well, I'm not particularly surprised, but let me just say this. If you want stakeholder capitalism, then the laws and regulations that shape the capital market have got to be changed. If you want an economy that puts a greater value on, for example, the job security and the economic security of workers, if that's what your value is, and that's what the value of what other people's value is, then you've got to change the rules. As the rules are now constructed, and the regulations and laws, it is shareholder capitalism. So whether we change and how we change is up to you. And up to you.